Yeah, good morning, everybody. Hope you guys are doing well. Been a pretty interesting week, but yeah, we'll see what we can get into today. If y'all could let me know if you could hear everything okay, see everything okay. Yet again, YouTube is back with this stupid nonsense. So yeah, let me know in the chat if you could just throw like a one or just let me know your feedback. Can you see everything okay? Is everything clear? Can you hear everything okay? Just let me know real quick. Appreciate y'all hopping on, by the way. Okay, it's been a pretty nice week, right? Hasn't been too many crazy things going on. We were correct in a spectacular fashion yesterday. So that's always good. So we do got news at 5:30. Yo, what's up, Emmanuel? Let me know if you could hear everything okay. If you could see everything, like are the small letters on the chart, numbers on the chart, are they visual? Like, can you see them clearly? Some stuff's potentially too small, or like the really light stuff. If you could see this new week opening gap up here, if you could see those letters, that's a pretty good thing. So yeah, just let me know. Okay, perfect. Everything is great. That's what I like to hear. Okay. Appreciate you, Emmanuel. So yeah, if we just take a look at the overall view of everything, we still see that the bonds are still dragging lower. As a result of that, you could see, maybe not so much in the currencies, but you could see that this lower price delivery has been having a pretty solid effect on the indices, at least the Nasdaq. So we could see that we ran up. We've rejected this bearish order block. Let me see, is that a weekly? What fair value gap was that? Okay, so that was this fair value gap. Kind of just hugged the lower portion of it. But again, I talked about this new week opening gap in here, how there's inefficient buy side delivery up here and sell side. And price ended up going right to that area that I, again, highlighted. I said could be something it wants to reach into. And then, of course, we got a pretty aggressive rejection that's now looking like it wants to stay below the equilibrium point. This is also a suspension block on the daily chart, which is basically volume and bounce, fair value gap basically together. So the high and the low of that, that's a range. See the lower 25% being respected. We got the middle 50% being respected on a closing basis. The wicks did the damage, but the bodies told the story that it was going to close below. So what happened once this candle formed? It continued to go lower. Notice how from that equilibrium point, we had a pretty dynamic delivery. If this is going to end up getting out of this consolidation, like I said yesterday, the moves that push price out of consolidations starts from equilibrium. And again, you can go back test and find all the evidence you need to prove that that is a true statement. We could see that on the S&P, this rejection block still held up. So it's still interested in potentially dropping. But we'll see what happens with the dollar, because the dollar is aggressively repriced lower. This could very easily be accumulation, right? Manipulation and distribution, which may end up getting us up above these highs up here at some point, especially if we get the yields to continue this rampage that it's been on. So there's a clear decoupling going on in some fashion when it comes to some of these assets. Like the currencies are rallying I guess a DXY's decline is kind of instigating that. But overall, things are a little sloppy right now when it comes to correlation. This big drop in the dollar, though, clearly has sent these higher. The indices have been having somewhat of a problem, though. At least the Nasdaq and the S&P. Well, yeah, all three of them. All three of them have been kind of just stuck. And again, the war and all this stuff, like that stuff impacts the certainty in the marketplace. And when there's a lack of certainty in the marketplace, it could manifest some problems. Okay, so we have a low here for the S&P. Okay, so that might become something of interest. Okay, and then we got the high up there. We got a rejection block in here, coupled with this rejection block, coupled with this order block. So you could see how the layering effect of these PD arrays, they're respecting each other. We also have a bullish order block in here. So I would say, if we're to measure, did I measure that out? There's something critical for us to pay attention to is the midpoint of the fair value gap right there. I don't think I need that. If it could respect this and we get up above this high here or above this candle, we may look to target these buy side liquidity pools and maybe even get excited enough to try to race up here, especially if the dollar decides to really pick up going lower, like pick up at the downside. We talked about this little piece of the gap in here. So right there. Okay. So we've already kind of blown past that. So I'm very curious to see if price is going to hold inside this range from this high here to that low. That's the true fair value gap. It was just this, but now that we're reaching lower into that, I mean, we could classify the whole entire fair value gap and kind of get a measurement on that and see midpoint. We don't want to see this get targeted if it's going to continue to go higher. We need to see this act as accumulation, manipulation into a PD array. And if we're going to continue to carry this higher, we need to see a change in state of delivery up here. Early one would be right here when this candle closes. At least that was a 2-day. So if we look at the daily, we have this order block here. We have a stutter candle, consecutive candles. Once it breaks above this high, that's a true change in state of delivery. You got the early sign of a change in state of delivery right here. This volume imbalance in here, coupled with this bullish order block after a stop run, if this candle or the next couple candles end up delivering through that, this is the PD array that ICT calls an indigo PD array. It's the order block with a volume imbalance right above it. Okay, or an order block with a volume imbalance right below it. So you could see it happening both directions in here if this gets above here. So I'm going to bank on the fact that we still may see this act as accumulation, manipulation, and then distribution potentially to the buy side. The only way that I'll know that this retracement is done, though, is when we get a change in state of delivery on this higher time frame. That's how you gauge. I mean, this is a very important topic right here, but this is how you gauge when the daily chart is retracing or any other chart, right? The daily chart in particular, because it's part of the narrative, right? If you're in a larger retracement that's in a big trend, in this case going higher, to know when price is done with this retracement, to have a level of certainty that's a little bit stronger in terms of you knowing that we're going in line with the narrative again and we're going to be done with the retracement, you want to see a change in state of delivery happen. Okay? Before you get the change in state of delivery, which, I mean, it's in the name, right? If we're going bearish, but the overall idea is bullish, in order for us to try to go bullish again and have a reasonable level of certainty that we could trade now in line with the narrative, you got to see a change in state, or at least a shift in market structure. That's up here, but the early change in state will be right here. true change in state will be up here because it's coupled with the consecutive candles and a stutter candle. So when price rallies up above that, that'd be a true change in state. Once it gets above here, again, this is a PD array. So if we can get another candle that prints down into this and then respects that, and then starts to gravitate higher again, that respect or lack thereof in terms of this area, once it gets above it, will determine whether we're going to continue to go lower or if this is trustworthy to identify that we're going to continue to race higher. We see that this retracement, if we were to go to this monthly chart, has been a monthly retracement going into this wick here. Okay. We have equilibrium right there for this range from the low to the high. So we're at a discount right now. So we got accumulation, potential retracement. This is manipulation possibly if bullishness is going to remain. We confirm it by seeing price get above this in terms of timing. That'll be our change in state of delivery. And then that could end up leading us to targeting all the buy side up here. And then eventually we may see a gravitate up here. But if this fails, we have a wick, displacement. We have accumulation in here. So if this retraces, can't even break past the midpoint of this, can't even get above this candle, and this turns into an order block that gets traded through, that would be the time when we would look for this to get targeted as trendline liquidity or low resistance liquidity, rejecting the ability for this to just be a retracement to then go higher. This would also be classified as a balanced price range. So we got to gauge whether this is going to be treated as such, right? We got the yields rapidly going higher. So that makes me feel like this is accumulation, manipulation, distribution, and all price is doing is coming back into this range to set up another leg. But again, to have a level of certainty that many people want, going from retracement to continuation, you want to identify the change in state of delivery. Again, there's news at 5:30, by the way. So in 6 minutes, we'll have news come out. And then we got President Trump speaking at 6 o'clock later today. So that's interesting. I thought that was 6 a.m. Didn't see it correctly. But we'll see what happens. We do got the indices now going lower. Sent out a markup. I believe that we will continue to go lower. If that's going to be the case, then we should end up seeing the dollar go higher. Okay, so I would like to see if we can get this to target this. If we zoom in a little bit, we do have a large wick in there. So we can get a measurement on that. I'm not going to trade ahead of this news event. Could we have went in here and found an idea? Sure. We mapped out this market maker sell model. We're at the low end of that regular trading hours gap. From here. Okay. So as long as we continue to hug that lower portion, we may still see price continue to drop. But all the regular trading hours gaps that we have mentioned have played a significant role. We have the lower portion of this one, came up, tagged it. This was a 4-hour inversion. Talked about that live yesterday. You guys could go watch all the details that were discussed. Price then created a bearish breaker here overnight. So for London, that was a beautiful sell-off. London has been very fast. Asia was reasonable. We like this, right? We like it going back and forth. But London has now been very quick. So that doesn't happen all the time, but most of the time, this type of behavior in London or previous session could lead to the next session being a little bit chaotic. We just completed this market maker sell model here. We're in line to finish off the full market maker sell model, which is what I believe is going to happen. Again, this is a balanced price range. So the lower 25% of this, lower 25% of the regular trading hours gap from yesterday, I think that stuff should be able to respect these levels or this analysis, and we should be able to see this continue to try to reach for sell side liquidity. So that's my objective. That's my perspective today. And if we were to go to this daily chart, what are some longer range targets? Well, we have this down here. Let me me take that off. Okay. We do got a new day opening gap in here, so that's interesting. This, if it's going to continue, that should be a gripping point for price, along with the balanced price range that we talked about a second ago. And again, we got this wick right there, so I will. No, I think that's all right. I think we can leave that. So this is the groundwork for anything we're going to do on the lower time frame. Again, this large wick here is going to be significant. So price is going to keep going lower. It's going to have to respect these levels and keep pushing lower. We don't want to see it come all the way up here. If it does that, then you got to be a little skeptical on the fact that this low here is going to be taken. We're at the low here. So we got high, low, failure swing, breakdown. So this down candle here is also an ICT mitigation block. So just another reason why this lower area in here should not be traded all the way back through again. Oh man, the S&P is just super obvious with these equal lows here. That is a beautiful framework. Previous regular trading hours gap. Look at how beautiful the quarter was hit and respected. We have a large wick with displacement if we can get it. That'll leave this as a BPR and then make it even more certain that this failure swing is going to be targeted. We also have one down here. We also got relatively equal lows down there too. There's lots of sentiment on the back end for the stock market to go lower. Rate hikes, which may not happen. They may keep them the same. The situation that's happening in Japan, war, I mean, all these things are very uncertain. So we do got SMT at the lows there. That's interesting. So yeah, if we do get a rejection that comes back into the range up here, you know, the SMT could be responsible for that. We do have engineered now low resistance liquidity right there. So again, this low here should be able to be I guess I'll take that off. I think we could be able to continue to treat this as a situation where price could look to go lower. London has been very, very fast. So it may wait until 6:30 and try to come back and scoop up some of this before it gives a really energetic acceleration. What I do like is the fact that this wick here is followed by displacement. So again, that should be treated as a BPR if it's going to be time where we get out of this consolidation, because we're still technically in a consolidated range. So that could lead to problematic price delivery. We may gravitate back into the middle of the range. I think it's less likely for us to then, you know, get back up into this equilibrium point. I think it's less likely today than it was the other day. I think it's more likely that we'll probably go lower. It could run up a little bit simply because of the fact that London was so quick. They just want to come and scoop up some liquidity and then look to go lower. But for now, again, I'm just going to assume that we're going to keep dropping. And again, this is low resistance liquidity. So if it is going to go down there, it should go pretty quick. Go to the 5-minute chart. Got a small mitigation block in here. Anchored at the low of the regular trading hours gap from previous day. So I do think that this should be able to hold in here. If this holds, that's a 15-minute fair value gap or a wick I talked about a second ago. So we should continue to see respect to this. If we break down, should see respect to this. This order block is significant because it's overlapping a quadrant, a PD array that's overlapping a higher time frame wick quadrant is significant. That's a way that ICT talks about filtering significant PD arrays. Some of the best fair value gaps, order blocks, or anything else is going to come from when they are overlapping a time frame that's larger than the time frame you're utilizing to identify the PD array. So this is a large wick. If you go to the 5-minute, there's an order block meshed with it. So then you got a couple in time, right? And what are the other assets doing? So again, we do have a weekly. So we got weekly levels here too. Lines up with the PD array from the weekly quadrant. So we're in that upper part. I think it's the daily. It's the daily wick. So again, just like every other day, we're not going to be in a rush. We're not chomping at the bit to do something. Okay, we'll let price open up a little bit. What you got to consider as well, aside from the liquidity and things that we've identified so far. Let me make this smaller. So aside from the liquidity, we got to consider power 3. So where's the daily open price? What has happened overnight? Well, we've had a swing lower after price manipulated, tried to get to equilibrium once more, failed, hit that low end of the previous day's regular trading hours gap, and then we rejected off of that. Okay. And we went down to take out this low resistance liquidity here. You could see it went right down into it. And then it created a bearish breaker here overnight, and then we gave one more run lower. And it seems like we're in a real hurry to try to get somewhere. Where could we be in a hurry to get to? This potential low resistance liquidity down here that's now been engineered. We did take out this, but again, this is the longer term view relative to this low. That was low resistance liquidity as well that was created. Right, and that was PM session low or lunch hour low from yesterday. So I'm curious to see if we can't get it to come down, wipe the rest of this. There's actually a fair value gap right below as well. That's what that green box is. And aside from that, we got the daily wick down there, the 50%. So price may want to come down and get into that. So we are in that upper part of the daily wick. So that's an opposing PD array. When we look to target price lower in this case, because that's what my main focus is going to be, we have all these different lines in here, right? The different pieces of the quadrants of that wick. Those are all targets before we get down to the initial, maximum target. Axe Gaming, I absolutely do. You can actually scan the QR code on the top of the screen, or you can go into the description of the video and check out the link there so you can get more details about that. It's essentially me doing this every single day in my private group. When you work with me on a one-on-one basis, there's no month-to-month option for that. But, we kind of customize your whole learning approach. I meet you where you're at. But it's also including every single day live calls, doing what I do once a month here, or have been doing once a month, where we're going live pretty much every day. I'm doing that every single day with my private group. And they see that everything that we do here on YouTube is done literally every day. And the statements that I say in terms of we could find something every day, and we do find stuff every day that offers profitability, that statement's justified by witnesses and me doing it for years. So just for some background and just details about what it is that we do in my private group. But if you just like these live calls, you don't feel you need one-on-ones, I have access to the group and those live calls. You just don't get the saved archives. That's part of the lifetime members. They get to relook at all the videos, have personal videos. I'm making a course for them. I never had a course, never really wanted to build one, but I'm getting too many requests, and I think it's effective to, constantly assist students. So, you can pick which direction you want to go, or if you just want to stay here on YouTube. I have lots of students that are really good with this as well. And I do encourage students that are really sincerely serious about their trading. If you want to join that private group, only if you're serious. If you're not serious and it's kind of a hobby, I don't encourage you to do it. Just don't. There's no real reason to join. It's only for the ones that are sincerely serious, who are ready to be purists in their trading with ICT's concepts. By the way, it's holding in here, like we said it should. Let's see, rough pricing. We're actually the cheapest pricing in the whole entire industry relative to the value you get. Some people are charging thousands and thousands of dollars and can't even do half the things that I do and my students at the same time. So we are absolutely purposely the cheapest in the industry relative to the value that you get. So because of that, I don't do discounts. Kind of just is what it is. And discounts kind of lowballs what it is that we do here, lowballs the value. So I refuse to be that way when it's already cheaper than everybody in the industry. And most people are not doing what we're doing on a daily basis. That's a big statement for someone to say, but I come out and prove it every day. And my private group students like Emmanuel and many others who hop on these live calls as well, if I was lying, they would come out and say, nah, he's full of shit. But that doesn't exist because it's not. It's the truth. So not just because I say it either. It's because I come out and actively show it. So, and my students are doing phenomenal. I have a student named Harley Trades on YouTube. I encourage you guys to go follow him. He's becoming a savage. He has tons of value to provide, not only from his own experience, but, he has a background here. Along with ICT as well, who definitely deserves a lot of the credit as well. But yeah, not many people doing it like we doing it. Okay, if any. There's like a handful of people that I respect in the industry. Other than that, I mean, some of the biggest traders that you see on social media, I have students that have been in these big discords and tell me that these traders are not who they say they are. Yeah, exactly. Harley from, he runs some classes in Dodgy's Discord as well. He's been with me for what, 3 years? I think he was with us before he was with Dodgy. But he felt around like everyone does, and he found a home here, and of course he has a relationship with Dodgy as well. Yeah, I appreciate you saying that, Emmanuel. I appreciate you, brother. I've been watching ICT for a couple of years. Yeah, it's typical. ICT's concepts work. The logic he uses works. It's undeniable, but it's just sometimes the communication and how things are taught. He's a computer coder, right? He's a complex individual. So in some ways, even ICT himself has admitted this. In some ways, he's not able to reach everybody. So when students of his, which again, he has said this himself, when students of his come out and maybe have a easier way or more clear way of teaching things, there's value in that. And he's even said out of his own mouth that there are students that communicate things in a little bit better way Not if they're recreating stuff. If you're renaming shit, trying to claim like you made it or you figured this out or this and that on your own without crediting him, I mean, you want to run away from those people because they got egos and they're giving you half-ass information to sound different. 99% of the time, if someone's renaming something, it's you're going to have holes in your knowledge because they're trying to separate themselves from ICT when they could just simply give him credit and show that the skill set is worth watching. I never understood why people can't just give him credit. You can not like him and all that. Not everyone likes him, and that's okay. But you don't have to like him to use the concepts. It goes for every mentor. If they got something of value, they're willing to give it to you. Take what you need, and eventually, when you walk on your own, you can thrive on your own. But I encourage everybody to be a purist. I don't trade any other concept. I used to try to mix and match and think I need all this stuff, and I used to think I need every ICT concept to be profitable. And it's like that was a good mindset. So I discovered everything and got to taste and feel everything so I could find my way. But over time, you learn that there's certain things that you don't need, and then there's a certain list of processes and understanding that once you succeed with them, once you organize them in the proper way, or have someone that can teach you how to organize them in the proper way, like what are all the components that you need to make sure you have, so then eventually you could say, yeah, I truly have confidence that I don't need anything else, right? If there's mentors out here like me who are able to teach students what is required, and you can use different concepts within ICT's concepts, but you don't need everything. That's a big sticking point for many traders. They think they need every single concept, and it's just not the case. But you also don't want incomplete information. So that's why it's very important to listen to people who prove that they know what they're talking about, who have a track record teaching people, whose students come out and vouch for them. Not just because they have a big channel or get a lot of attention, but they're sincerely out here, actually showing stuff that works that people vouch for, and not just by taking signals either, because I discourage only signals being taken because that does nothing for you. That's putting your future in someone else's hands. And if you don't got time, it is what it is. There's good people that offer that service for those types of people, but I don't think it's worth it. You could just be a swing trader. If you have a busy life, I teach how to swing trade too. I have models for that. But it really just depends on your goals. Yeah, so the tier 1, which is the one you're describing right there, that is access to all my live calls every single day. There's a lot, there's a lot of stuff you get from those. You don't have the archive, so you can't go back and rewatch them. But again, there's so much volume with these videos that you still get value from it. And you have access to all the resources that we've shared over time in the Discord. I mean, that thing is just a encyclopedia of just amazing content in itself. But if you want one-on-one access, because again, it takes a lot of time out of my day. I have many people that I do it with. So I have like 3 or 4 live one-on-ones every day that are like 3 hours. So you can imagine it takes a lot. I can only have so many. But if you want access to that, eventually, maybe you like what I do, you want to get a little bit closer partnership. You also have the archive videos from all the years. You have other videos that amplify certain concepts. I'm building a course for students that are on the one-on-one basis, just so I could spread myself out a little bit. I never wanted to make a course, but I've gotten too many requests, so I might as well just add it. It's not going to change the value of anything. It's all going to stay the same. It's never going to go higher, but then I'm also never going to make it lower either, because the value is just, I'd be cutting myself short and letting too many people in, because I don't want everybody to join. If you're not serious, if you're not going to listen to good advice, if you're not willing to change, right? If you're not willing to have those hard conversations with not only me, but with yourself, and again, listen to good advice, be coachable. Or if you're just looking for signals, I don't encourage you to go with the one-on-one situation. I do give signals, right? I make you think though. I'm not just going to give you take profit, entry, stop loss. You have to define that. And I teach you how to do all that stuff, right? But, again, it just depends on your goals. Um, I do think that this YouTube channel, I make it a point to give you a ton of value. Um, like so every call is packed. It's long. You gotta have patience, but there's so much to gain. And I'm not just saying that because I feel like that's the case. There's over 200 plus students I've worked with that say the same thing. But yeah, so there's tier 1 and tier 2. Tier 1, you have access to the whole community, all the resources that are in there. You just don't have the archives or one-on-one access. And then I also have like a section for my one-on-one student resources that has a couple of other things as well, for those that want to be freaks, right? And take every concept even further than we already take it, which is pretty intense. And then I also have indicators as well that I'm making, and that's going to be part of the one-on-one members as well. Again, it's not going to change the way that things are already priced. So you're going to end up you already have so much value from what I provide relative to the price that it's pretty insane. I get people that hit me up all the time, my friends that are in the industry who also have services that charge thousands of dollars. They're like, why do you lowball yourself? And the reason that it's priced the way it is first of all, my students help me with the pricing, figuring out what is reachable for everybody. And I also wanted to make it so it's attainable, right? I don't want it to be too much. Trading is enough. I don't have to do anything. I could never be on social media and I could just trade. And I was doing that for a while. But, you get bored and you want to make things, you want to have a little bit more of an impact and spread the blessing because this stuff can truly change your life. And what's the point in having such a blessing if you're going to be selfish with it? You might as well find ways to have an impact in this world. And I think that, helping others in trading was my way to add more meaning to what it is that I do, aside from just making money, right? Like it's exciting, don't get me wrong, always, but life is more than just about yourself. And that perspective is why I started a community. So yeah, hopefully that kind of gives you guys some details about, where my head's at as a mentor, also kind of what's included. And again, I don't encourage everybody to join, right? But if you're serious and you want to be around things that we do here on YouTube every single day, then that's an option. Or if you just need that extra handheld approach, or if you want to be around traders that have all different backgrounds, who are all learning the same stuff, who all have different yet similar issues, who are also being helped to find solutions, it's another benefit to being in the community as well. And I'm not a signal driven trader or mentor. I'm very process oriented. I want to get you to be process oriented too. I let my skill set talk. I'm not flashy. I don't shove my profits down your throat. I don't say, hey, look at my Lambo. Hey, look at this, look at that. I keep it very, very trading based. So there's not a lot of, there's no BS at all. Zero. I may take shots here and there sometimes because the industry is full of scumbags, but for the most part, we're not controversial. And I'm a purist in ICT. So if you like ICT's concepts, if you see there's something to it and you need someone that can help you with it, I'm pretty sure we can find solutions for you. Either just from you being on YouTube, me answering questions like this, or partnering with me in my private group so you could be with us every day. And I really mean it. Every single day we're live. If I'm not live, I'm doing one-on-ones, and I just didn't have time. But at least Monday through Friday and Sunday, we're always live. I'm always on the market, always talking about something, always helping somebody. So I don't take days off either, right? I trade and look at the market at least on my birthday, on every holiday, or I'm helping someone. So yeah, hopefully that answers any questions any of you guys may have. Just give you some perspective on what we do here. I can tell when I see trading knows what he's talking about. I've also been watching Harley for quite some time. Yeah, he's a savage. He's a savage. He's definitely a savage. I think that's probably how you stumbled across me, because Harley's kind of in my camp. He's in my universe. So maybe the algorithm recommended me to you as you've been going through not only ICT stuff but Harley stuff in particular. Yeah, he's been with us for like 3 years, I think. I think he joined me before he was even 18. I think he's like 20. I don't even think he's 21 yet. So he's a young guy, one of the youngest that I've taught. Definitely the fastest learner I've ever dealt with. And I think part of it is because when traders succeed quickly, it's because they're willing to accept when they're wrong and make radical changes that are needed. And they take good advice when it's talked about. They don't let these bad habits manifest when they're being warned about something, like over trading and over leveraging, for example. Like the fact that you need to go in and study very particular things every day. You need to make this a part of your lifestyle. A lot of people either don't have time or they're just unwilling to take it that serious, and then they get unserious results. Or they're learning from someone who's an idiot who can't even do what we do on YouTube, in any consistent basis. So you just gotta be careful. It's the Wild West out here, so. Well, hopefully I'm able to help you guys. If I was even able to help one person stop themselves from being destroyed by the market and make this something that's very beneficial to them, I would have classified it as a win. But now we're well over 200 people that I've helped. So beyond what I initially aimed to achieve, now we're looking at much more. I'm looking at 10,000 people, 20,000, 50,000. But even if the impact that I've already had is all we achieve, that's fine too. Whatever God wants us to do, I'm here for it. So yeah, you guys see that the market hasn't really done anything. That's why I'm not necessarily too aggressively pointing your attention to it. All the levels that we've observed have pretty much, they've been respected up to this point. Again, with Fast London, you always got to be very cautious, because Fast London, what is everybody doing from overnight? They're thinking it's going to go short. Can it still go short? Sure. Right? Is it best to proceed with caution, though, because the previous session was so fast and that may be used against them? I think that's the best way of viewing things. That's how ICT teaches as well. If it's a fast previous day, right? Like we have a large range previous day, the next day could end up being a small range, unless, there's a catalyst for us to really accelerate, which there hasn't really been, other than CPI and PPI yesterday. But it barely did anything today, so the market's kind of sideways. It's kind of stuck. Again, what is causing this, right? In terms of conditional and situational awareness, we have geopolitical stuff happening. We're in the summer months, the worst part of the summer, which is July, and prices in a range. It's consolidated. It's gravitating back to equilibrium, like we've been talking about the last couple of weeks. We've been talking about the influence equilibrium has if it refuses to get away from it and keeps revisiting it. That same equilibrium point, though, from the high extreme to the low extreme, although it can act as a problem until price gets away from it, it can also help you in terms of identifying the origin of the move that's going to accelerate out of it. If you look at every consolidation on any time frame and you map out the high and the low, you get equilibrium, you'll see every time it decides to leave equilibrium, it's going to be rooted at that equilibrium price point. That equilibrium is a problem when it's bouncing back and forth, but when it's time to leave, something like this will happen and it'll accelerate away from equilibrium. I don't know why it does that, but this is just what it does. Could be because that's fair market value relative to the range. Could be, whatever other reasons that they have, which aren't really important. What's significant is how we can use this to indicate or frame out a setup to then target a particular pool of liquidity, which again, we have a whole list of those liquidity pools that are significant. Right, so that being the case, again, we're still just hovering around this 15-minute wick that we talked about. So I'm very, very curious to see how this is going to be treated after this large range. Again, we do have this low here. Again, that low, high, lower low, that's a market maker sell model. Okay, we could see accumulation, another accumulation in here. Look at how each accumulation on the left side has been treated, given this is a retracement to then go lower. Once it breaks through, it hit a logical PD array up here. Okay, if we go to, say, the 15-minute chart. This high up here, what did it reach into? Bearish breaker. You see the stutter candle right there? Consecutive candles, price displaces above it. That's changing state of delivery. Consecutive down candles with a stutter candle. Once it closes above that, preferably with displacement, it'll seek liquidity or a PD array. And you can see that it did so there. Created a small market maker buy model if you were to go down to the lower time frame. Then again, this low to that high, dropping lower, accumulation. Look at how the left side follows on the right side. Same thing as this, what I just outlined here. So this idea, which is simply this retracement on the 15-minute to this breaker to then go lower. When you drop down, it's a market maker sell model in the form of a 15-minute retracement to a 15-minute breaker that then had continuous downside objectives being met. You also have this as a market maker sell model in itself. Smart money reversal once it got below this. Balanced price range in here once it ran up above the high, then took out the low. Buy side, sell side. So the midpoint of that should not be traded to. Was that respected? Yeah, the logic definitely worked out. And so that makes sense of this London retracement to continuation. And that London retracement to continuation makes sense in the grander scheme of things, right? This is a market maker sell model too. We just outlined this. And then all of this in here is some of this stuff that we talked about. So you can see the fractal nature and price, how there's a lower time frame picture that works inside of a higher time frame picture. We're in a bigger market maker sell model. That justifies anything that we just talked about for this to continue to drop. From the London retracement here to go lower, from the breaker to this retracement that was also at a breaker. Also an inverted previous bullish breaker that got invalidated here. Those levels still remain significant as an inverted level. So you could see how it came up into that, inverted all of that price delivery. We also had a wick in here. We also had bearish objective. We also had equilibrium. Well, wait, that's not equilibrium. Where's the equilibrium? Oh, Oh yeah. Okay. So that is equilibrium. It's also a new week opening gap, lower portion of a weekly fair value gap, which is simply a new week opening gap. But you could see that the lows of these levels were respected. We got the midpoint of that inverted breaker being respected. Market maker sell model. You could disregard the inverted breaker here if you wanted and just look at this as a market maker sell model. Simple retracement higher to go lower. Because we're now looking to get below this low here, all of this price delivery, if it's going to be bearish, needs to be respected in that lower 25%. This in itself is also a retracement to go lower. We have buy side, sell side, buy side once more, treating all of this as a balanced piece of price delivery. Why is it balanced? Because we got buy side, sell side delivery. So if we're going to keep going lower, it's already offered buy side and sell side. There's no real necessity, especially because there's a PD array there. Most of the PD arrays are BPRs as well. But because of this being the case, buy side, sell side, there being a PD array, higher time frame wise, it looked like it's denying buy side delivery. We have a failed market maker buy model in here, right? All that stuff being considered after this displacement, it makes sense that this low was going to be respected as it looked to come and take out some of the sell side liquidity. This displacement gave it away. The failed buy model gave it away. We then switched once we broke 50% here and broke this bullish PD array, which was again the breaker that got invalidated. Once this displacement happened and got us below 50%, once we got back below equilibrium, once it came up and rejected that, that puts this market maker sell model in motion. This larger market maker sell model allows you to go in here and frame another market maker sell model or just simply the retracement to a breaker to deliver that distribution as we look to target sell side liquidity. Okay. So yeah, let me know in the chat. I did talk about a lot of stuff right now. Let me know in the chat if you guys are following along, if you guys are able to understand what I've just outlined for you. Basically just painted out the whole idea as far as what is there in price supporting our objective to keep going lower. Also supported this move from yesterday. There was also a 4-hour inversion fair value gap in here that we talked about, where this wick came up. And on live, I was telling you guys, watch this. If it breaks this, it'll trigger a sell model. And it ended up triggering the sell model. We ended up taking a 50-point sell-off. Talked about 4 trade setups yesterday. Hesitated on a couple of them because the intermarket relationships were not doing what I wanted them to do. So I was transparent about that yesterday. And I also showed yesterday and the previous live calls why you need to not be concerned about missing moves. If you're here learning and every day you feel like you're getting better and moving forward, just live in the moment where you're the type of trader that doesn't worry about missing a trade setup. Even if you are kind of upset about it at times at your current skill level, you're learning something and you're in a community that literally gives you so many weapons, so much clarity and understanding that you'll eventually get to the point where you're not worried about it. So because you're already going to get to that point, you might as well live today like you're already at that point, even if your brain's telling you otherwise. Right? It's going to do wonders for you. And even if you're not profitable right now, live emotionally like you're already profitable. Right? You got to manifest this stuff. You got to trick your brain. And then eventually it'll become reality, especially with what it is that we do here. It's not financial advice. I can't guarantee anything, but you have the best chance when you're sticking to the studies, taking good advice, and getting your mindset where it needs to be, so that when that time comes, you're ready. This thing's a little bit too high up. So yeah, again, hopefully everything makes sense. So this is all still pre-market open. Look, you see the risk that I was talking about, how London was so fast. It may deny price's ability, at least for the time being, to really accelerate and go lower. You could have made an argument for this to be a stop run, the new day opening gap being respected. Price came down to this inversion fair value gap. Got a little change in state of delivery here. So price came down into that. This is a high, low, higher high. That's a bullish breaker right there. So that could be a form of counter trend trading to simply target some of this trend line liquidity, or maybe just to get us back into this low here, which again, that's part of a previous sell model. It's part of this retracement in here, right? So high is right there. And this is a balanced price range. So I don't think it's going to be able to go deeply into that. If it does, if we were to get from this high to that low, if we get above 50% or just simply above this, these are very, very equal highs. And if it does look like it wants to target some of that, again, equilibrium is still denying price's ability to accelerate. Because we haven't fully got out of the consolidation yet, this is a risk that we have to deal with, that we have been dealing with for the last couple of weeks because of that equilibrium. It's not something to be fearful about. It's just something to be aware of. You know, just like a person that's in war, you know, you have an objective to achieve. If there's bombs blowing up, you may be hesitant. You may be worried about it. There may be higher elevated risk. But does that mean that you just stay on the sideline and you don't complete the mission? You know, you don't do what you're trained to do? No, it doesn't mean that. So same thing in trading. We're at war every single day. Someone's trying to take your money so they could succeed and you fail. So you got to come prepared. You know what I mean? And you just got to know what you're doing. Navigating consolidation is one of the hardest things to do. But you could use market maker buy and sell models to navigate a consolidation, right? If it's like this, you got a sell model in here, buy model, sell model, buy model, sell model, buy model, sell model, until it breaks out, right? Or maybe it goes lower, breaks higher, and then breaks out the other way. Then again, you'd have a buy model. If this did break down, hits the low of a consolidation, and then starts to rapidly push lower again, that is a balanced price range. You would expect that it doesn't come to 50%. And if it does, you'd then expect this. So that's how you would be flexible in that type of scenario. But if you were to get something like this to be respected, this in itself, right, you'd be able to then classify that as a market maker sell model. Targeting that. And then you just do the same thing every time it retraces. Okay. Another market maker sell model. Failed market maker buy model. Balanced price range. Right? Low, high, lower, low. Balanced price range. Okay. We've talked about this before, utilizing market maker models in this way. Maybe we'll talk about it again soon, more in detail, but we use this stuff every day. I refer to it every day. It is the core of what it is that I do, aside from Power 3. And I encourage you, all of you, to make it part of your core framework as well, or at least start working towards it, because market maker models can feel a little bit advanced, and you need a ton of pattern recognition, which is why every day I come out and highlight them in every price swing. I'm telling you guys about them every day. There hasn't been one day in the last 6 years where I didn't mention market maker buy and sell models and Power 3. Right? So if your focus hasn't been on those things, it really should be. And if you're watching like the 2022 model stuff, finish that, obviously. And then hop on these live calls and do your best to dig into market maker models too when you finish the 2022 stuff. Because a lot of your questions that you ask, that all of you ask, any student that has a question about market maker models, Once you understand the market maker model idea and you start to go into price and see it happening over and over and over again, many questions get answered simply by that one concept. And if you had power three, even more questions get answered. You may have more questions at first, but over time, with experience, shadowing someone that shows this every single day, things will fall in order relatively quicker than you think, because none of this stuff is random. And we could find something literally every hour. I could find a market maker model every hour. I could find power three happening every hour, right? If you go to the second chart, you could probably find them every 15 minutes. There's a fair value gap every 15 minutes that could be engaged. ICT has claimed that. You can go ahead and go back test that. It's ironic that he said every 15 minutes too, because if you take an hourly perspective, you break it down into quarters, you have 15 minutes, 15 minutes, 15 minutes. So every quarter of an hour, right? When you split it into fours, has something that you can operate in terms of a PD array, whichever PD array it is that you want to use. But fair value gaps are super powerful. So it's a good example. So yeah, this thing got respected. It looks like they're going to try to come up into here. I'm very curious to see how they treat this. I would say that if this gets traded through, it's going to put this price delivery at risk of coming all the way back. I'd be looking up here. I would not like to see this if we're going to trust bearishness. I will not want to see this high get taken out. Do got this fair value gap. Definitely would keep tabs on that. So again, hopefully everything that I've talked about makes sense. Hopefully to some of you it's repetition kind of. I talk about this stuff all the time. And those of you that are brand new, maybe you're just hearing this type of perspective for the first time. If it seems overwhelming, that's totally normal. That's how it is for everybody. In anything that you do. Like if you try to learn computer coding all in a week, you're going to be completely overwhelmed. And we're internalizing an algorithm. Okay? So you can keep it as simplistic as you possibly can, but there's still a reasonable amount of work that needs to be done. There's experience that has to be gained. You can't be a professional with any tool in any industry very, very quickly, like within a week. And if it's more advanced, more technical, like this, it may take you a little bit longer because you got to get familiar with the tools, and then you got to get familiar with yourself, right? How you behave in certain circumstances, and you have to be able to get conditional awareness. That doesn't come overnight. That doesn't come from a boot camp. That comes from active time spent on the chart. And you can get there quicker by being around someone that teaches and knows what they're talking about and proves that they know what they're talking about, rather than trialing and erroring it the whole time, right? But that has its place too. So do you guys have any questions? We still got 15 minutes until the open. One thing as well, could you have taken a trade in here? Could we have made an argument for it? Sure. We're inside the macro. It's an inversion fair value gap. Once price closes outside of it here, that confirms this as an inversion fair value gap. This is all stalling at a couple of new day opening gaps. That's what these red boxes are. From the indicator that my student Mark made. We also have SMT, which is an indicator I made. Clearly it showed. So we got SMT. It's been very bearish. Everybody and their mama is probably trying to short. London was fast. So again, it's typical for them to either stall out or completely reverse to begin the New York session. And that's because they want to pull back against the liquidity that was formed overnight, because the sentiment is we're going to be bearish. I would really not be overwhelmingly surprised if we end up seeing this come up to this. I would really not be surprised given how equal it is, given the SMT, given how fast it's been. It'd be a little questionable for this to keep going lower, though, if it does that. Like overall, if it breaks this, I'm pretty sure that it's going to end up targeting equilibrium again. Where the hell is my dollar? I don't know why it's being taken off all the time. So yeah, when it comes to the 1 hour perspective, we're simply retracing. So we got to see how this is treated. If it retraces, respects this wick, this is a rejection block. Once it broke through that rejection block, it becomes an inverted rejection block. We also have the wick here. So price is turning into that wick along with the fair value gap. So if this is going to keep going lower, again, I do not want to see this range get violated. Why? Because this is a balanced piece of price delivery. Sell side, buy side, sell side again. So if it's going to be balanced and go lower and not reach for this, we're going to tag this and then treat it very sensitively. Maybe it's just taking some short-term stops. So then it could set up another leg. Let me check these lows here. Yeah, look at the S&P. The S&P doing what it's doing here with these equal lows. We got equal lows here. Seems like it's engineered to me. We have buy side, sell side delivery. It came back, treated that as a balanced price range. This fair value gap being overlapped like this, that's a balanced price range. It's another PD array. It's an inversion PD array. Look at the precision to that low level right there. Isn't that beautiful? Goes from that to market maker sell model. This is also the breaker, similar to what the Nasdaq did. Low, high, lower, low. If you zoom in at the top, you have also low, high, lower, low. It's a breaker. It's also the 2022 model here inside the macro in London. This right here is a balanced price range too. So this retracement, if it's bearish, should not have come back to the midpoint. Did it ever do that? No, it kept going lower. So again, we got 10 more minutes. So we'll see what it wants to do. We're having a pretty nasty retracement. It's coming off SMT at the lows. So, we'll see how impactful that is. Let's check out all the indices. Yeah, we got the Dow and the S&P that have relative equal lows down there. So I'm not overwhelmingly convinced that we're going to have a huge rally. The Nasdaq also is the one that created the lower low. So we take a look at the 4-hour chart. Do got this wick down there. We haven't really had the chance to close below this candle's wick. We do have a wick with displacement. That in itself is a PD array. That's a form of a balanced price range if it's going to keep going lower. If it can't hold that, then again, we may not go lower. And it's probably best to look at the other opinion. But of course, that's an if-then scenario. And sometimes you got to wait for those things to either confirm and then catch continuation, or wait and see if it invalidates it if you have a logical level above us in this case, and then look for continuation going the other way. So for now, it looks like bearish power of 3 has unfolded. If it was to close right now, which we have, what, 40 minutes before our new 4-hour candle comes out? Given the S&P having those equal lows, given the Dow has those equal lows, again, we'll see if it wants to try to get below this. It seems like it's having a pretty rough time getting through not only the wick in here, this is also the upper daily wick, right? Upper portion of the daily wick. So it's trading into this stuff, so it may have a little bit of a hard time. We're still not fully out of this range, so this is also a stop run. If this was a failure swing like this, it'd be more expected to go quickly, but we may grind our way down there if we're trying to go down there. Or we could come right back into the range. Because again, either one of those has a chance because we're in consolidation. I'm more so leaning, if I had a gun to my head, more so leaning towards trying to see us take out this low here. So we'll see if we can build some type of sentiment to get it down into that. Then again, it is Thursday. We did take out this liquidity. We did tap this bullish order block. Okay, so consecutive down candles. Take that open price. It's right at the bullish order block. We've had 3 taps into it. And London was very quick. So again, the initial anticipation is to see it do something like this. But all of this, depending on if it respects this level here, honestly could just say that this level here, the gray box. Okay, if it respects this level and we start to see this rally aggressively break down, we'll then be able to see the previous on the left side, right, bullish order blocks. Once they get violated, if we can get a rejection from here, hopefully dollar in that case could then look to try to go higher a little bit as well. But if we can get that, then we could then frame a market maker sell model continuation from this 1-hour retracement to go lower, right? Anytime accumulation gets violated on the left side, depending on the response in this area, we'll be able to then determine that that's going to hold. And if it does break down below this and then that doesn't hold, again, it's just a stop run that may then set us up to get up into here. I'm only going to be concerned with this when we get beyond this high to that low's 50% level, or simply breaking outside of this or showing no respect to this 1-hour fair value gap. This could, again, very easily be a retracement to then go lower. I mean, you could just see the engineered liquidity down there. See equilibrium right there. We've been talking about equilibrium on the higher time frame, but look what happens when we're even on the lower time frame, dancing inside of a range, hanging around equilibrium. It just keeps gravitating back to it. That's a cause for problems. You couple this with the higher time frame consolidated as well. I mean, you got a condition that you got to be cautious in. So again, I would like to see if we can't get price to come down here. Very obvious equal lows. We'll see what happens. And again, this is not a surprise that they're pulling back on the sell side. But we're just looking at a PD array that could potentially support this continuing to go lower, assuming that this is going to continue. Right? If it is going to continue, what needs to happen is this fair value gap needs to hold. We're basically running against the overnight sell-off, basically taking people out. And then we maybe setting up a premium to go discount. I would have much rather preferred them leave this liquidity available. That would have been nice. But we'll see. We'll see what happens. The next layer that I would like to see for the morning is to see if this can get targeted. Now, if we start to invert these levels, say it breaks above, comes back down, breaks above even further, again, we may gravitate back to equilibrium. That is a constant risk because of how the conditions are and where we're currently at on that weekly chart. So we can't discount it. But this liquidity here at a minimum, or this liquidity, right? Preferably this one. But if that fails and we invert these levels, my attention goes there. Okay, so that is our perspective overall. And again, I would much rather prefer to see them continue this and go lower. Dollar, though, if it keeps dropping, it may be a cause for concern for shorts. And we may even see this get visited. It's a little volume imbalance in there. So yeah, I mean, if you were looking at this 1 hour chart and this was a 5 minute and you were looking at it, I mean, it'd be pretty obvious that this is a retracement into this. If it's going to be bearish, it's going to have to hold that and then keep going. Because again, this low to that high should act as a balanced price range. It's already delivered a sell model. We're inside of a larger one that hasn't fully completed yet. So ideally, we get this to continue. And contingency, like I said, is going to be up here if that was to fail. And we would just simply wait for it to displace, get above this accumulation, map this out as a market maker buy model once we're up here. And we could reasonably look to engage something in this area. Just simply waiting for price. Let it unfold. You don't got to get the best of the best entry. You don't got to pick tops and bottoms. But of course, if that top or bottom is at a really logical, obvious level, you could reason with yourself to decide. So now we got the open price. We do see that. Let me remove that. We do have the equilibrium or midpoint of the regular trading hours gap. So the likelihood of it reaching up into there is going to really determine like how aggressive it tries or fails to get up into this is going to determine whether shorts are going to be even viable or if they're going to come and take out our contingency up here. Because if they can't even get to the midpoint up here and we start to accelerate towards this low, again, the regular trading hours gap is a PD array. So just like any other PD array, you want to see if we're bearish, the lower 25 to 50% get respected. If that's a bearish order block, you want to see that lower portion get respected. If it's a breaker, okay, same thing, right? Lower 25 to 50%. If it's bullish and we're trading into a bullish PD array, you want to see the upper 25, upper 50% get respected. So in this case, again, this is regular trading hours. The regular trading hours gap is a PD array. And if we're bearish and we're going to trust some of the things that we talked about continuing to push us lower, this is part of that, right? This is one element. How the regular trading hours gap is going to be treated. Does the lower 25% get respected? Right? Does it trade through the regular trading hours gap and then aggressively reprice back to the low? And then overall spend more time in that lower 25%? That stuff tells you that bearishness is likely to continue for the rest of the session. If it does this idea in the opposite direction, staying in the upper 25 to 50%, refusing to come back down to the lower portion, then the session, in terms of AM session, is most likely going to continue to be bullish. Okay, so again, we're filling price out. If this ends up below this low, I would watch this reaction, see if it can respect that. I would ideally like to see that happen. Watch this next 30 minutes. This candle, if it closes inside this fair value gap, it's still valid. But once it gets priced to close outside of it, again, it's questionable because now it triggers this as a accurate inversion fair value gap to potentially go to our contingency plan up here. So yeah, watch this candle in here. We're going to watch this. Is it going to be immediate rebalance and then accelerate? If that's the case, I don't need it to get to the 50%. That'd be enough for me to anticipate it's going to get up here. If we retrace into this, close this range in entirely, and then break to the buy side, that's an immediate rebalance, which is one of the strongest characteristics of continuation. So this looks like it's immediately breaking through. So we'll see. It's tagging this, so let's see what happens. Remember, this range, this low, high, lower low, midpoint should not even be contested, let alone traded aggressively through. But if we do go up, my objective will be right here. But I'm more so trying to lean towards seeing if we can get it to go lower, like I said. So we'll see. If we have to adjust, we'll adjust. The adjustment level will be up here for me. We have our accumulation level outlined, the bearish order block, the highest portion, or upper 25%. Because if price gets above that, that should be used as support. And then this will turn into a buy model. Yeah, this wick right here, it's not convincing of continued buy side. Notice that we're respecting the lower 25% of the regular trading hours gap. Like I said, if that's going to be the case, the price should be able to hold and then give us continued downside delivery. That was a beautiful rejection. Mind you, this is anchored in that 1 hour bearish order block or bearish fair value gap. Beautiful, beautiful breaker entry. And that just about does it for me. So yeah, breaking down below that, we got to return to the breaker. I engaged right there, simply looked for 20 to 30 points, offered me about 50. It's enough for me. Pays yet another bill in my monthly expenses. Could I hold it? Sure. Do I want to hold it on CPI week? I don't want to. That's my prerogative. Could you go ahead and, do things outside of that? Sure. I talk about this all the time. But, that's a very personal thing for you. You got to make that choice. Just for completeness sake. Amp live. Execution right there, right at that bearish breaker. Took profit right below this low here. Right as this went down. So 400. 401. Not bad. Yeah, how many points was that? About 45, about 50. I see this as a market maker sell model now. And now, unless this gets beyond this breaker range here, we'll continue to try to see if this can go lower. Like I said, we started off, I said, if there's a gun to my head, I want to see shorts, preferably. unless we were to get up into these levels. So was I considering a buy at this moment? No. Could it manifest in a little bit? Sure. Right? But we'll have to see what happens. If it breaks this high, we don't need it to get up to this to determine it's probably going to go higher. Right? This high, low, higher high will become a bullish breaker. You also got this accumulation, and again, this bearish breaker level there as well. So if we were to get above that, that inverts the breaker level. Look at the bodies. See that beautiful respect? It cannot even close inside this breaker level. So those are good signs. The price will continue. All right. Price breaking down below this may offer a secondary run below these lows. So yeah, that one right there. So we got breaker, first entry. Inversion fair value gap is the second. Third is the breaker delivery coming into that, right? Which I used that one, just simply took that 50-point candle. There's nothing wrong with this idea. It's not invalidated. Stop goes above here or above the fair value gap in there. If none of that's executed, you wait till this, and that's your secondary entry. It's a little bit too close. Those of you that do know me, I did kind of, bend the rules a little bit. We don't like to take trades right at 6:30 because the risk of this chopping around, it's pretty great. But nonetheless, when it's there, it's there. And if you're accepting to the risk, you pull the trigger. And if you take a loss, so what? You wait. Then you wait for a continuation. Okay, so let's see if this thing can get us down below these lows here, like we talked about. So again, if you didn't take this execution, if I didn't take the execution, this would have been my secondary idea. But this is why I love the breaker, right? You're able to engage either a stop run that has SMT at a PD array, which in this case it was, right? The 1 hour fair value gap, right? Did we not frame this whole entire setup off or set it up before it started blasting off? Right, that right there is enough. You know what I mean? Maybe you ended up engaging something up here. That offered almost 100 points. Right, maybe you look to engage similar to the way I did. That offered about 50 points. Right, maybe you chose to engage this idea that I just talked about. There's your 30 points. Right, just quick scalps on CPI week. This does have a chance to want to get down here. London being so quick, obviously, can cause some turbulence. It's another reason why I was cool with just not holding this. It's a fast London, right? Nothing has changed in the analysis. Nothing has told us the bearishness is not going to happen yet. Nothing. Not one thing. This is just a retracement into the breaker. This is just a retracement into the order block. We have one change in state of delivery, second change in state of delivery. Those of you that know the Razor model, one of the models that are specific to our community, because no one uses this model. I literally discovered it out of ICT's 81 PD arrays or entry mechanisms. You will stumble across with experience things that repeat that you could then maybe even use as a model. But this was one right here, the entry here. It's not only the breaker, fourth entry, right, for continuation, but it's also the Razor model. We have one change in state of delivery, second change in state of delivery. So limit order can go there, stop goes above the high, and you should see speed and distance through the low. And right as I'm about to describe that, it does exactly that. So again, you saw that I framed this out. You saw how I had conviction towards this going lower unless we got up here. So I labeled my invalidation levels and why they're invalidation levels. I mapped out an opposing liquidity target just in case we're wrong, because you can't just assume you're going to be right every time, even with the accuracy level that I showcase every day. I could still be wrong. You got to be humble. You can't think that you're better than everybody, and the market's never going to stick something up your ass if you play games. Okay, you will get torn to pieces if you come in here with a level of ignorance, especially with a low amount of experience. What's up, Jen? Good morning. Let's go TP. Oh, beautiful. You did. So you did get a chance to get in, right? I don't know when you just joined, but you heard what I talked about with the breaker. I'm assuming. I mean, you probably heard it before in the private group. But yeah, if you didn't execute this, right, the initial idea that I talked about, you had chance here, and then I gave you a secondary chance, real time, live. I said if I didn't engage this, I would engage that. Okay, so there's no reason for you to sit here and think that there's no opportunity, right? Again, I don't encourage you to take the trades that I shout out. I do encourage you to study the crap out of the way that I determine bias, the way that I determined why I thought it was going to go lower rather than go higher. And it's all anchored in a higher time frame perspective, right? Beautiful. Great job, Jen. Great job. It's pretty surprising, huh? How the culture here is just absolutely. I mean, I can't say that there's anybody really doing it better other than ICT. I got maybe two of my friends from the charter group in mind, maybe three. I mean, there's a lot of really good traders, but the order in which we do this, the velocity of good trade setups that we call out, not that we take every trade, just the sheer number of amazing trade setups that we're able to get in front of. Like, my full target's going to be met, by the way. Okay, I'm a little salty. Not going to lie, little salty. But you either have rules or you don't. And I'm trading within the first 30 minutes, which I don't like to do. I got my minimums. Overall, the whole entire narrative is correct. I could have engaged something right here or right there, like I said. But I'm cool. I'm satisfied. My bills are paid from the market. I mean, it's just spectacular how we do this. It still surprises me every day. Like, I never thought that I'd be where I'm at. I have no clue where I'm going to end up, which is a crazy, because like most people can kind of frame out what their life is going to look like. With this, I have just no idea, and you don't either. The longer you spend time here, the more serious you take this, the better you'll become. And you have no idea where you'll end up. Yeah, it is what it is, Jen. I'm proud of you, by the way. You've been just absolutely being amazing ever since you joined. Shout out Harley. Shout out Harley for mentioning what we do here. I'm grateful that you guys have given me the trust. I hope that every single day that I'm showing up here, well, every week here on YouTube, but every day in my private group, I hope that you guys leave every call, like I said yesterday, feeling like you got more value than anywhere else, but also are able to take a step forward every day, reinforcing everything. Because that's all these calls are, right? Showcasing what we do, but also continuing to give you guys things that can push you forward, reinforcing the things that I feel are the most significant. That I've seen certain things that I talk about all the time benefit many traders. including some of you guys that are on the call right now. You know, and I keep hammering home certain things. Market maker sell models. Look at this, right? That's a market maker sell model. Okay. Accumulation, drag that over on a closing basis. It never closed outside the high. Accumulation, drag that over, never closed outside the high. It wicked above, but there's a PD array it reached for. So that's fine. That little mohawk, that's fine. Okay. And we just continue to drop. I talked about the breaker. Talked about what anchored this idea to continue to go lower. I talked about the target. I talked about why I felt shorts are going to be more significant. I talked about the risk when it comes to a fast London and what that could bring to New York session. I also told you guys not to be fearful. Just stick to what the higher time frame's telling you. Talked about how price reacts to the regular trading hours gap. I said if it can't even get to the midpoint, it's more likely to go short. Pretty much every single point that I've mentioned today and in every other video, almost every time shows up in picture perfect fashion. And it's either I'm the most lucky individual on the planet or we know what the hell's going on, right? And ICT concepts work. So I guess luck's kind of part of it, right? I got lucky to even have discovered trading in general. So I guess I'm kind of lucky. But that's about it. Everything else is based on facts. And it is a pleasure to have you guys spend time with me. X Gaming, my first live trading with you was great. Okay, you're not going to escape the rants, okay? There's going to be some rants, but they're not going to be like his. I personally enjoy his rants. A lot of people think he goes a little too far. But hey, I make sure you guys have value before we go on a rant. Many times the rants are triggered by some question. But I guess it's just like sharing wisdom, I guess. It's not necessarily a rant. Again, I don't have an ego. Maybe it comes off in some cases when we smash it as a small ego. But it's just a crazy feeling of like, this is like real stuff. Like, 'cause sometimes you're going to take a look back, like after you gain some experience and really start to know and be like, man, like this is like really something that I can do all the time. And that's foreign when it comes to most traders. Like they have no idea when their next trade setup's going to happen. We know the exact hour, the exact moment in the hour of every single hour, right? We don't trade every hour, but we know exact moments where things should unfold. Many times we know how they should fold, which comes from the teaching that I do when it comes to order flow and reading order flow live. You know, putting all the different pieces together to create this process. Like, so you're gonna look back at some point, you're just gonna think like, man. I mean, things like this. I mean, it's like every day that I have this feeling like I can't believe that this is something that I'm able to do. Because mind you, I'm not special. I dropped out of high school. I was homeless. You know, my family has been destroyed by drugs and alcohol. Like I don't have a big family. I don't really have any influences that could have taught me or even given me the idea of trading or investing in general. So it's by the grace of God that I somehow found my way to being a trader. And then it was by the grace of God that I found ICT. You know? So it's just a journey that's just pretty spectacular. You're going to have moments, especially because of the things that we talk about. I make it a point to give you things that you could go in actively and look every single day. and I teach something that's applicable right away. And then I show you in the chart right away. So then you can kind of know what to go study on your own. And if you do that, if you take the good advice, if you go in and look at the things that I'm showing you, like actively live, and you go get hundreds of examples and you ask questions, and you just be an active participant in the community here, or in my private group, or in the free Discord. I'm telling you, this really, it may sound egotistical, but there's no place on the internet in the trading world that's like what we do here. There is a handful of them that are really, really good, but I mean, there's just nobody that's like what we do. The accuracy percentage is literally off the chart. The understanding, the clarity, and what price is going to do, it's literally off the chart. Like most people talk about, oh, you don't have to have a big win rate, blah, blah, blah. I mean, although that's true, there's a way to have a good win rate plus get in front of big, giant moves. I mean, think about how many moves I've called just in the last 2 months, right? Where prices went hundreds of handles. As you can test your model, look at how the trade looks. Yeah, Jen, there's also another competitor. I have a student that actually works for them, FX Replay. They're kind of competing now with TradeZella, which is kind of funny. So they offer like very similar stuff. I'm not sure about the AI situation. TradeZella is absolutely spectacular. They're absolutely incredible. Absolutely. Just the data you can get. And then of course the custom journal that I have, plus the one that Harley has. Obviously the one I have is inspired by Harley. He showed me that it could be made, right, and how it was made. So that has like a back testing feature too, if you wanted to use that. So if you can't afford TradeZella and whatnot. But if you can't afford TradeZella, you absolutely should. You absolutely should be having tools like that if you can afford it. I mean, there's nothing better than that. You should spend so much time back testing and looking over old data and analyzing the different moments where your model shows up. Like, you should have at some point tens of thousands of examples of one model. And if you want to add another one, you need to get another tens of thousands of screenshots at some point of that model. That's what I did with market maker models, and all the models that I have. Maybe not tens of thousands, but I have hundreds and hundreds. I had to buy a 10 terabyte hard drive because I have just so much. Like it's nuts. I have for now. Yeah, I have it. I have for years. Yeah, for sure. Definitely use it 100%. And again, I have all the drills and stuff that I mentioned in the private group. So you can also do some of the back testing with those drills as well. We can have a discussion about that too maybe on Sunday. I know I have some new students that I don't think we've had a chance to go through the study drills, all of them. We've went through a couple of them, but all the study drills, the lethality drills that I tell you guys about. If I can't find the video that I did, it should be in the mega link. But if I can't find it later, we'll just hop on a live call, maybe Sunday, and I can go over each one with you guys. Those of you in my private group. But again, speaking of back testing, right? It's something you can add in addition. But yeah, TradeZella is beautiful. It's kind of what the personal trade trading journal that we have, both me and Harley, pretty much tried to inspire it from the TradeZella. I don't think there's any real way unless we spend tens of thousands of dollars to get a company to well, actually, maybe I can get one of my students who computer codes. Maybe he can make a custom GPT. Yeah, I never thought of that. Actually, I think I'm gonna have to go ask Mark about that. Yeah, I think that'd be awesome. I was thinking about something too, like to make an AI that has everything that I know, just to kind of like sit there for maybe 6 months, feed it all the information that I have from my perspective, and have it as like an assistant to all of you guys that are in the private group. So you can have that. So if there's like any specific questions, I could document um, any questions that I've been asked or any topic that I go over and utilize. If I could find a way to implement that into an AI agent, have it be like an assistant, so that any question anyone has, you guys can ask it along with me, obviously. But you can just have that extra reinforcement. Got to use AI the right way, right? It's not just a Google that looks up things for you. It's also a tool. You guys can do the same thing too. Like with your own study, you can have it as like a study coach, like a study assistant. I give some prompts to my private group to use in ChatGPT that helps you dissect issues like a trading psychologist would. And of course, you have me as well, right? I'm here to help. I've invested thousands of dollars into a trade psychologist over the years, who I shout him out all the time. His name's Trading Composure. There's other ones, but he's the one that I use. I talk to him every 6 months. You got to manage yourself. You know what I mean? And you can't neglect it. But there's tools and stuff that I'm working on in the back end to try to give you guys even more value utilizing AI. And I'll probably be making more indicators as well. Yes, still refining some certain indicators that I'm going to give you, but a lot of the basis of many of them are already done, like the razor model. Right, matter of fact, let's go check, see if it called something today. Set a trade setup from earlier. That one was in London. Oh wow, look at that. Called a little short there. That was kind of sketch. You have to also, when you're using any indicator, you got to use it at the right time. This is only on the bear setting. 75% win rate, 83% on today to capture at least 1R. Right there, right there, right there. Look at that. 3 trade setups in a row that went over 30 points, which is 1R. That's beautiful, huh? So I'm still making sure that I'm refining this even further. We talked about it a lot previously, but I'm not satisfied yet. 75 to 80% is pretty satisfactory, right? But I'm putting in like student coaching mixed with the indicator. So you can go and click on things and it'll define, or maybe take you to a link or a video and help you define certain elements of it. I also don't like certain things that get missed. So I'm trying to just refine it. It's getting better though. You can see it. It's beautiful. Again, you only take the ones that are in a macro. If a trade setup starts in a macro, right, you can obviously take the continuations, but yeah, it's a pretty good percentage. I don't think there's any other indicator out on the internet that is hitting 75 to 80%. It's not every time in every condition, obviously, but for the most part, it never drops below 60%. And I mean, that's competing with the best of the best, supposedly, on the internet. So yeah, we got a lot of things in the works for the private group. That's just one of the perks, custom indicators. But yeah, so could take that off now. So yeah, now we're in the silver bullet window. So it looks like we came down, purged liquidity. It would not be a shocker if they were to run it up and take these guys out. I would not be surprised. It is Thursday. This is a higher time frame PD array, right? So it's been aggressively pushing lower. If we were to try to look for a continuation short, I would believe that we have to get below this low here. Then we would look at this as another market maker sell model, similar to this. Download. So I hope you guys have had fun this week. I hope you guys have learned a lot. More so than having fun, I hope you guys learned a lot. You know, today was a spectacular clinic in terms of anticipation. Talked about this being a balance. Think about all the stuff that I talked about that helped us frame the significance of this market looking to try to go short, rather than thinking it's going to bottom out and go higher, right? Solely. We framed out a scenario that would have promoted that idea, but again, everything led to shorts. And that's what it offered. Pre-market, it offered buy side as it looked to trade into this area here. We do have a new 4-hour candle. So a new potential power 3. So we got the open price here. It's part of the indicator, one of the indicators I have. Let me actually go check something real quick. So we got the accumulation in here. Manipulation, that's what the red signifies. Then we distributed lower. I also have a smaller version of it. Accumulation, manipulation, distribution. This larger one, if this was to end up getting above these highs up here, I'd say it fails to give us that continuation. We have this low to that high. We have midpoint. We don't want to break through that. If it does, we may see this turn to distribution going to the buy side up here, especially if the dollar keeps going lower. In that case, if that's what happens, then we got accumulation, manipulation into the liquidity, to then distribution. And we may look to try to target buy side up there after the stop run just took place. But again, we got to get through some of these levels here. And this wick, right? We got to watch and see how the midpoint's treated. Again, we got a breaker here, right? We should not, if we're going to be bearish, come all the way up into this. This has me thinking, especially because we wicked this low, there's no body closures below that low. So it seems like it was just a purge, and we may look to gravitate back to come and punish people from London. So the previous area that I talked about a buy in, let's see if that's going to lead to price looking to give us that little turn. And we got relative equal highs up here, not only in the deeper level up there, but also right there. This is a potential market maker buy model. Okay. So we should see speed. If it's going to get up above this high, it should, in a speedy way, not allow any of these people to get back in. They ran down, purged liquidity. Who's winning right now? It's shorts. But what happened? They've now pulled it against them aggressively. So this may be manipulation to then try to come and target some of this upper regular trading hours gap levels. The response off of this liquidity is very telling. It came down, swept it, and is aggressively repriced back into the range. See that? See what happened when it did this the last time? How wicks below a significant level, but we're closing above it. That same characteristic is being seen here. What time frame was that on? That same perspective is happening. Was it on the 1 hour? Yeah, it's on the 1 hour. Same thing's happening. Failure to close below, and now we should see speed. Second stage distribution for the buy model. So there could have been a buy taken in there if you like the market maker models, based on the context that we could not close below this liquidity and it was just a purge, right? Rapid repricing to the buy side. Then we got relative equal highs up here. We have a breaker. Okay, we have the fair value gap there from the hourly. So it looks like we're going to end up getting outside of that, and that may set us up to target this deeper level. That's also justified by the regular trading hours gap being inefficient to the buy side. So we've balanced out the sell side of the regular trading hours. But now we have this upper level to possibly come and balance out, especially if dollar's going to keep dropping. I could take that off now. So this may, again, be a accumulation, manipulation lower to tag this, to then give us that reversal off the heels of the fast-paced London session. This is the risk of trying to demand continuation when London was very fast, one-sided. So let's watch this right here. It should be quick. It should have a speedy reaction through this high. All of this is happening inside of macro. So that liquidity is very clean. We're all the way up there. I don't think they're going to leave that. So that little run from here to there, something to watch, something to study. Also got the 15-minute wick right there. See this large wick right here from the 4 hour? We got a piece of the quadrant right there. That's coupled with the accumulation turn distribution. So again, just another reason why this thing should be able to hold and accelerate if we are going to not be interested in going lower here. The only way I would be able to get into another short is if we were to break down below this. I would then use this as accumulation turn distribution, and then we would be able to ride it even further. But we have a rejection block being created here. So we'll have to wait on the shorts. See if we can't get this thing to go bullish from here, at least short term. Come and take these guys out, and then whatever it does after that, I could care less. But you can see, right? Sell model, buy model, reinforcing the idea that I tell you guys, we're always in some market maker model of some kind. Always. And if this was to fail the buy model, we would drop. This would turn into a sell model. Right? Kind of reinforces when price is consolidated. Remember the description I talked about earlier? Right? Sell model, buy model, sell model. buy model, sell model, buy model, right? Okay, it's just nonstop. Sell, buy, sell, buy, sell, buy, sell, buy, sell, buy. Sell model, buy model, sell model, buy model, sell model, buy model. Same thing is happening in here, visually showing you that that's a fact. Sell model, buy model. If the buy model fails and we break through 50%, you then look at it as a sell model. When you're on these lower time frames as well, mapping out market maker models, when you get into these phases, right, like this in here, the market maker buy model, second stage, bullish distribution, all you really need is a PD array and to confirm that that level is in place. You don't want to see it break outside of this if it's going to be correct. So entry, target above this high, stop goes below, something logical like the midpoint of this, because you don't want to see it go too deeply into that. But you can execute on second stage or first stage distribution whenever you can identify them. That in itself is a model to enter when you have an understanding of what direction price is going in. And that's a universal trading model. You could trade in any condition. You don't need to even have a higher time frame bias. It's recommended to have that at all times, but it's not necessarily mandatory. And that's why market maker models are so great. If you don't use market maker models for an idea to enter, you could use it as a framework to confirm a particular direction. Because if you could frame out a market maker buy model from that higher time frame, what do you think the main interest is going to be? Right? You could wait for it to be on the buy side of the curve if that's what you believe is happening. Maybe this is a daily chart, right? And this decline is hitting a weekly, monthly, or daily PD array, and you're expecting it to go higher. Maybe S&T happens on the daily chart, right? Pretend this is a daily chart, not a 30-second chart. It's all the same. So if this is reaching down into a level like that and it starts to turn around and you can identify this as a buy model, what do you think your objectives are going to mainly be? What direction is price going to be looking to go in? Or what direction are you going to look to trade in for the most part with normal risk? If it's a buy model, you're looking to buy, right? Unless you're in the sell side of the curve. Many times you're not going to spot the market maker buy model or the market maker sell model in that first leg. Once you get better at identifying when price races towards a particular level that you're anticipating is going to have a response, as it reaches towards those levels and you get better at understanding that concept, you'll be able to frame out the early stages of, say, a buy model and just target a PD array. Use that PD array for the smart money reversal, right? So you pin that as a smart money reversal potential, right? And then once you see it start to turn, this is the easiest part to catch, or at least to identify. Predicting the early stages requires a little bit more experience. But smart money reversals happen at PD arrays. Like if it reaches down into a level that's going to react like a bullish order block in a bullish trend, if it's declining and it hits that bullish PD array, you can expect that if it's a market maker buy model or if it's going to be bullish and we're going lower currently, that's going to most likely be the sell side of the curve when it reaches towards that level. And then once it hits that level and you see a confirmed response, that is identified as smart money reversal. So there's an origin, smart money reversal anticipation. So there's like a PD array or a liquidity pool that you expect a response from. And then there's terminus, right? Which could be either the high or a secondary level like this, for example, that you could be overall reaching for, that the market maker model is getting you towards. So there's three components, right? The start, which could be consolidation. It could be a start of a retracement. Then there's a turning point, add a PD array, add a liquidity pool. And then there's a target, right? Or the main narrative, wherever it's headed towards. And it doesn't have to get up here. It could just simply get to this, and that's your narrative. You know, it's really all you need, right? And then, of course, all the phases in a market maker model. Whatever happened on the left side, if you have a bearish order block, a bearish consolidation, a bearish fair value gap, they should all invert as price looks to break through them and go to the original part of the market maker model. Everything flips around. And in particular, the phases of accumulation most likely are order blocks on the left side or consolidation. You know, fair value gaps have their role, obviously. Look. So, but you got to get comfortable with using all these concepts together. You got to get comfortable in anticipating when the smart money reversal is going to take place. You're only comfortable in understanding where the smart money reversal takes place by practice. Understanding there's an origin, right? You go in and you look for things like this, right? We have a retracement that ended up going lower. We know that in hindsight. Okay, you take that, you put a box around it, you outline it, you identify the higher time frame level that this turned from. This is a smart money reversal in a sell model. This is a smart money reversal in a buy model that was used to get us up here. This is the bigger smart money reversal. It's at a PD array or liquidity pool. Doesn't have to be a PD array. Well, highs and lows are PD arrays, but I think you guys know what I mean, right? Like fair value gaps, order blocks, all those things. Smart money reversals are going to happen at those phases. Okay, this right here, smart money reversal to go lower. This right here, smart money reversal to go higher. Basically, every turning point that's at a PD array or taking liquidity, if it's going lower to go higher, right, that turning point is a smart money reversal. You can go in there and look at it as such because we're always in a market maker model. Same thing here, right? This was a potential smart money reversal for maybe a buy model. That buy model failed. So what happened? This ended up becoming a smart money reversal for a short targeting the low. You know, contextually, I wouldn't have thought of this as a buy model. It's got a breaker, broke down. You know what I mean? So it was a bigger market maker sell model, which did end up failing, by the way. So what does that make this low? We have the origin up here, PD array, turning point. That's smart money reversal for a buy model. What happened up here? We failed or denied that liquidity up here and then broke down. That's a failed buy model. What generally happens if a buy model fails? We're most likely going to trigger a sell model. What happens when a sell model fails? We're most likely going to trigger a buy model. So this is a perspective I don't think I've shared about market maker models. I shared something similar, but you know, hopefully you guys are able to follow along with that. I know those of you that have been with me for a while that are studying market maker models, that was probably a light bulb moment. There's going to be a lot of those, especially for those of you that are new. You know, aside from the fact that, you know, every day we find something worthwhile. It's pretty eye-opening too. But yeah. So again, hopefully all that stuff made sense. I still believe that we could get this to be a market maker buy model. We'll see what happens. We're still inside of this. So what do we see here? If it's going to be bullish, what I'm seeing in here is possibly accumulation, manipulation down into our distribution level that should push us higher if it's bullish. So once we break above this level, any return back down into that, I would be looking to try to take a buy in that situation. I would look at this as a bullish breaker. And then I would simply look to target this and maybe this. You know, maybe I will add another position, something light. Good morning, by the way, Fotis. Just realized you sent a message. One of my longtime students. X Gaming. I do only trade the AM session. I know how and teach how to trade the other sessions, though. Again, it just goes back to all the things that I talked about. Market maker models, power 3. Every session has a market maker model and a power 3. Every hour has one of those things, right? Every session has a role to play in the daily range, though. So you kind of got to know what the role is in the daily range so that you can kind of know what type of volatility there is to expect and what the role is in the price action you're trading within. So I'm looking at this as potentially accumulation, manipulation, distribution. We have a change in state of delivery. If we get a second change in state of delivery, that'll be a different story. That put us back in line with maybe looking to see further sell side delivery. But in this, we have an inversion fair value gap. So let's keep tabs on this real quick. We are trading inside of a higher time frame level, so it could be a little tricky. Could be very high resistance to get us up here. This can also, if it continues to go higher, if we do end up targeting the highs up here, those of you that have been with me for a while and heard me talk about deferred liquidity, this is a breaker. So it's trading into it. It's high resistance. If it's going to be bullish, it's, you know, running down like this to stop out traders, accumulate, manipulate, and then distribute. That, you know, doesn't seem far-fetched. This could be what is called deferred liquidity, where it's deferring the run through because they're trading into high resistance. So what does it do? It sets a low, takes that low, gives a retracement. Then if it can prove that it wants to continue by, you know, breaking something like this, or in this case, closing outside of, you know, the upper portion of this distribution level, you know, we will then see pretty fast-paced movement because this is now low resistance if it chooses to get up there. Plus, we got the liquidity that's resting in the form of equal highs. But again, if this low is violated, we'll have one change in state, second change in state. That would trigger us into think this is a market maker sell model. And then instead of mapping out this here, I would map this out, drag that over, see if price can come into it, and then look to target the rest of the lows. You know, or we may just consolidate, you know what I mean? So we'll see what happens. I would honestly like to see if we can get up into this. You know, I'll hold that opinion until it breaks through this low. Okay. Looks like that interest was pretty short-lived. So now in this case, I'd be mapping this out. Basically this, I don't even really need this. We already have the new day opening gaps down here. Isn't it interesting how it treats these levels, these new day opening gaps? That's what the red boxes are. It's just bouncing around. So we haven't quite broken through that. This is a rejection block in here. We also have one right there. We had one right there. We also have a bearish breaker here. If you take this high, low, high breakdown, that's a failure swing relative to this high. So this low is not only a bearish breaker there, it's also a mitigation block. And again, if that gets traded through, shows no respect to it, you know, we're still inside this range here of accumulation. So preferably this was going to stay above the upper 25% if it was really bullish. It's a little sketch at this moment. We're kind of at equilibrium too if you go from this high to that low, or at the midpoint of that range. So again, I'd either like to see it break through this low, then revisit it to try to go short, or see us break above some of these levels. If we leave this as a failure swing, this upper order block or up candle here, drag that over, that should be treated as a mitigation block. So we'll see how it trades above it, comes back down into it. If it respects it and then just continues to run, then again, We'll keep a focus up here. I would like to see this targeted unless we break this low. Then we would have to consider the likelihood of it coming a little bit further, especially with dollar going higher like this. Actually switch a little bit. Oh, guess it's not really doing too much. So again, this is the dollar. Okay, this right here, it's pretty convincing that again, these highs are going to be looked at. We're still respecting the market maker buy model. We're creating a small version of the market maker buy model in here. So again, unless it breaks down, we'll look to go short in that case. But in this case, we're going to, unless that happens, we're going to continue to go higher. My attention is up here. I'm not considering shorts at the moment. So again, mitigation block here. So return into that. Now that's an opportunity to study. If we get up above this high, we have a high, low, higher high. That's a bullish breaker. I'm sure if we move up a little bit, it gets more precise. Yeah. All right, so we'll see what happens. We got a wick here with displacement. We do not want to see the midpoint of this wick here get traded through. Remember, this is the low, well, the whole range of the 1 hour fair value gap. So if we stay below this and this regular trading hours gap low, and this displaces through this low, again, it's justifying a further run lower. But my opinion is that these equal highs up here and the failure swing that's now been engineered should result in low resistance liquidity. We're just not at a real ideal time. So that may be a cause for concern. We'll see what happens though. You guys have any questions or anything? Appreciate y'all sticking with me. Hopefully you guys got value. If you guys have gotten value, don't forget to like the video, subscribe to the channel. I know it's easy to forget, but that really does help me a lot in terms of the channel. Gets me in front of people that I'm trying to help. It tells YouTube that this is worth listening to, that we got value. Because I know we got value. I know a lot of you guys believe it too. So if you could just like the video for me, be really appreciated. Yeah, if you go to, what is that, the 15-minute chart, we're starting to see a picture being painted here. Got a bullish 15-minute breaker. That may rocket ship this thing up. Now that we've confirmed that, it's closed outside of the open. The rejection block that could have held price is now being inverted. And we got relative equal highs up here that are very obvious. So again, unless it was to displace lower, we still have a little bit of opportunity to come up here. Wipe some of that. Ideally, though, if it's bearish, we don't go up there. It's going to continue to remain below this range. But it looks like it wants to give us one more run. And it's Thursday, and we've already hit a significant PD array very fast overnight. So just them simply coming up above here wouldn't really upset nothing. Seems like that's something they want to do. We got buy side, sell side, buy side again. So to gauge whether this is going to be bullish, we got to see how sensitive this is. Again, if this low is violated, it turns off my interest to get up here. You notice how we couldn't get above this? I was going to look at that as a breaker, but didn't quite set it off as such. Make this a little smaller. Yeah, it looks like the Nasdaq has been the more aggressive to the downside. With the S&P raging like this, I mean, clearly the Nasdaq is the sixth sister of the three. Dow's not really doing much better, but you could see that the S&P is just on a rampage. That should have an influence. I still believe that this could have a likelihood to get up here. So yeah, I still want to see if we can hold this. I want those equal highs up there. Okay, so here we go. We have a low, high failure swing. If this gets above that, any return to this upper part of the candles up here, we should see a very sensitive response if it's going to go higher. And again, we've set equal, well, relatively equal highs. It's a failure swing. Another layer up here, and then we got another deeper layer up here if it gets real excited. But it's just the timing that's a little off for me. So again, accumulation seems as though this was still manipulation. We haven't broken through the level that would have justified looking to the downside instead, right? So we may see distribution. You could look for a rebalance once it gets above, and then look to see redelivery. So short-term power 3 inside of the potential larger power 3 if it does choose to close higher today. So again, hopefully everything has made sense. I appreciate that, X Gaming. Glad you've been getting value, bro. Yeah, I didn't miss any questions. No. All right, so yeah. There's not really much else to say unless you guys got questions. Z said, when and how do you incorporate order flow? I go back and forth between order flow. I have no idea. Order flow and ICT are the same. It just depends. They got stupid order books and all this other crap that claim it's teaching you the real order flow or looking inside the candles, seeing the volume. All that stuff is complete nonsense. When I talk about order flow, I'm talking about the relationship that each candle has to one another and the story that's being taught in terms of the relationship, every candle has to the next. And then also the higher time frame, in terms of order flow, you can use intermarket relationships that helps you gauge order flow, how the overall candles are being respected, right? If price is going to go lower and you're identifying ICT PD arrays, how it treats those PD arrays once it leaves them and comes back, like this, for example. And if this is going to be a bearish breaker or a bearish order block or a lower wick that needs to respect because I want to see it go lower, the next candles that navigate into that level have to respect the lower 25 to 50%. This is one of the purest ways to actively see order flow better than any indicator you'll ever get. You also want to see if prices say here, you want to use our validation principles, which has to do with mapping out 3 PD arrays that go the opposite direction to where you're anticipating price to go in. So if I'm bearish, I need to look up for 3 PD arrays. Because if 3 of those PD arrays get violated and I'm looking to go short, I'm forcing a trade setup to go short. And the next thing that's going to get violated is me. So between what I just mentioned there, how price reacts to the PD arrays, intermarket relationships to help verify on the back end fundamentally what the overall market sentiment is, along with um, what else is there? So yeah, validation, intermarket relationships, and the order in which, the characteristics in which price is showing as it relates to each PD array as they form. So again, you got to realize, you got to think though, right? It's going to take experience identifying the PD arrays. It's going to take studying this concept so you can get a trust built within it. Because I can say it in theory and it might make sense, but you're not going to have the same conviction that I have, where I'm able to call the market every day and say it's going to go here and it goes there and be confident in it, right? And to be able to analyze the certain conditions and determine which side is more likely um, than the other side, right? Based on experience. Aside from the tools, right? It's going to be really helpful. But when it comes to order flow, no indicator is telling you actual order flow. If that was the case, it's just not the case. If it was the case and that was a tool that was available, it'd be hundreds of thousands of dollars. Smart money would not allow that to be the case. There's what the industry calls spoofing, right? They'll make the data look a certain type of way to get people to be fooled based on their understanding of the indicator, and then it'll go the total opposite way. This happens all the time with like the order book or any other order flow thing that shows a bunch of numbers inside of a candle. A lot of the times that stuff, when it's showing the results from those indicators, if you strip the indicators and look at them from ICT concepts, you'll see that from the naked chart, the ICT concepts are showing, something that the indicators are supposedly trying to show you, but making it 10 times more complex. You really only need a naked candlestick chart and a candlestick and understand the open, high, low, close of any given candle. Within that, or within the realm of power 3, or like I said, market maker models from earlier, you have everything you'll ever need. When I heard ICT say this, when I was in year 1, year 2, I thought he was a lunatic saying this stuff. But now that I'm well versed, I've spent tens of thousands of hours studying this stuff, applying the things that I teach all the time, especially the order flow idea that I just shared, because it seems too simple, right? It seems too simplistic. There's no way it's that simple, but it really is. And I personally prove it every day. So use me as a testimony to go and discover that you don't have to be overly complex with all these indicators. The only indicators that I have on my chart are used to highlight and bookmark specific ICT concepts that I would already go in and try to apply and map out on the chart. Either that or I'm documenting a time interval, right? Or mapping out if there's a crack in correlation, right? Oh, looks like one of my stocks is going to a level I like. I'll look at that later. But yeah, when it comes to any of these indicators, just know that it's a religion. People are just trying to put their faith in something outside of what the candlesticks are telling you. And every indicator, for the most part, I mean, a lot of people mean well when they make them because they don't know any better either. But for the most part, indicators are just literally distractions that I'm sure the market makers on the back end who created everything have injected into the bloodstream of traders to get their attention away from the candlesticks that literally tell you everything you need to know, right? The relationship that each candle has to the next. It's just, it's so significant. It's really all you need. I'm not sure what you mean by tape. Reading the tape, it's just basically looking at candlesticks. I'm not really sure what you mean by tape though. If there's a tool called the tape, yeah, then it's probably BS. You see how simplistic this mindset is that I try to give you guys? You don't have to worry about 1,000 indicators. You don't got to worry about all these different concepts from different people's perspectives and this stochastic. And I mean, if we're being honest, all these indicators that we learn, or like at first that we're exposed to, if we really were to take a step back and think about it, none of this shit makes any sense, especially if it's a lagging indicator. It's telling me yesterday's news for today's price and how it's going to affect today. Like what? Like something that happened 2 hours ago on an indicator has no bearing as far as what price is going to do. Price is only using inefficiency and liquidity, right? And, you know, inside of the ranges like this, there's other little key components to look at. But in a nutshell, if you want to make it even more simplistic than ever before, price is only looking to target highs or lows or inefficient pockets of price delivery, right? Whether that's an order block that it's retracing into, maybe it's to mitigate, or it's looking to fill in a gap that is inefficient on one side or the other. Time and sales, yeah, none of that stuff. It's another thing that allows spoofing. The time element, you want to erase anything that anyone else talks about in terms of time, unless it's something that's relative to ICT's outline of time. He's the only one that talks about things in terms of time that are actually useful. EMAs, absolute horse shit. The last 150 candles, the last 50 candles, none of that has any bearing about its average delivery. Has no bearing on what the next price action is going to do. And how do I know this? How do I know that this is the case? Because if all that stuff was as significantly important as it is, quote unquote, why am I not using any of it at all whatsoever and just using the mindset that I've been talking about, and I'm able to call price literally every single day? How is ICT able to do it with none of this stuff? Just what he teaches every single day. I mean, there's a testament to that. How are all these other ICT traders that don't use any indicators, how are they better than most people that use these indicators? Why is every prop firm, at least most of the popular ones, why in their top 10 are they flooded with ICT traders that use none of these indicators that are so popular? They're on the top 10, top 20 of the leaderboards of all these prop firms. Why is there so many of them who use none of these indicators at like the top of the top of all, like the whole industry, right? I mean, it's a huge testament if we just sit back and think about it. And again, a lot of these indicators are lagging indicators. How the hell is a lagging indicator going to help you with future price? It's lagging. It's already occurred. It's already happened. So how the hell is that going to help you predict? But then again, you think about it, everybody thinks it's random. They don't think it's anticipatable. They want you to react to an indicator so you can never learn to anticipate, right? And it's a dilemma. That's what separates these concepts versus others. That's what separates our understanding of order flow and price action and price delivery and liquidity versus others who are solely dependent on an indicator, not price, to tell them what is actually going on. And again, you see the difference in precision. You see the difference in consistency. I mean, every single day around the same exact time, we're able to call setups, right? Using the same stuff that I talk about every single day with no indicators that tell me when to buy or sell or have any influence over me buying or selling. It's just my understanding of time and price. So liquidity and PD arrays or macros and kill zones, different time of the week, different time of the year, right? These are in relative terms to time. It's literally all it is. Obviously that's a very, very simplistic way of seeing it, but at the core of it, this is literally all we're operating within. Of course, there's a lot of nuanced, advanced details to describe those things, but from a bird's eye view, that's just what it is. And I'm telling you right now, I mean, if you're doing okay with indicators and you feel like they're helping you, don't let me take you away from it, okay? Because everyone's different. But what I've learned from all the students that I've talked to, the moment you release the interest of having any indicators and decide to become a purist, if you're studying ICT's concepts, right, and you decide to become a purist, remove everything else because it's unnecessary, you'll start to see that price is telling you every piece of information you'll ever need. Yeah, well, see, if that's what you believe about the EMA, so be it. We didn't need any indicator to decide that it was a short. And we knew exactly when it was going to short. We knew exactly when it was that an entry popped off. Multiple. I called 3 entries today to go short. And then I've also talked about potentially looking to take a buy. It's obviously not manifesting at the moment. It did down here. But again, I just personally think that it's all a fallacy. But again, if it helps you, so be it. I think the best thing, though, if you're going to listen to my advice, the best thing to do is to relinquish yourself from any indicators, because those same people that use those indicators, the same people that teach and talk about them, are full of shit. They can't come out and do what we do every day. You know, where's their profitable students? You know, where's their track record being public and live? Most of their stuff is random because it's inconsistent. Maybe one day it's going to show, but the next day it won't. Right? Our stuff shows up every single day the same way. Maybe not exactly the same, but similar enough and familiar enough that we could pull it out and identify it like clockwork every single day. I think that's a big sell against indicators, at least from my perspective. But again, if you guys have indicators that help you, I know I have 2 or 3 students that do use indicators. And again, if it helps you, this is just my opinion, right? Something that I believe, and from students that I've taught, I've seen that it's actually helped them out to relinquish their focus from those things and put it solely into the concepts that are taught. It kind of brings back self accountability, self responsibility, and self reliance. It's not an indicator that's going to determine whether you're going to buy or sell. None of my indicators decide when I'm going to buy and sell because I don't trust it. Candlestick, and I guess that's a good way to look at it. Yeah, but the Renko bars and all those other things, those are another gimmick. It doesn't tell you what's truly going on. And again, to each his own. Of course, it's my opinion. You're going to believe what you're going to believe. But that's my opinion on the matter. But yeah, open, high, low, close, whether it's a candlestick or a bar chart, both of those are highly effective because all we're looking for, again, is liquidity and inefficiency and displacement. Right. And then, of course, there's market structure as well. True market structure, not just higher highs and higher lows or bouncing off an EMA or any other indicator. But again, that's just my opinion, right? Again, if any of you do use indicators and it helps you, don't let me pull you away from it, because you can make money doing anything, but you can't have the precision that is showcased with just anything. And that's a discrepancy. But yeah, so it's 8 o'clock, you guys. We've done a lot of work today. Hopefully you guys got value. CEX, I appreciate the dialogue, brother. Don't take anything offensive. Hopefully you didn't take nothing personal. It's not directed at you. But yeah. So hopefully you guys got value. Let me know if you guys need anything. We'll be live again tomorrow in the private group. This about does it for our futures marathon that we have once a month. Probably not going to do this forever. Not sure when I'm going to stop doing the once a month marathons, but for the meantime, we'll continue. And then, of course, you guys in my private group, we have our regular schedule, which is every single day. Okay. So I will see you guys here on YouTube back on Sunday. And we'll kind of go over any questions. We'll go over our weekly process like we always do and answer questions and, whatever else you guys need. Because, again, I'm here to help you guys. It's the only reason why I go live. So you can count on that. So I'll see you guys on YouTube on Sunday at 6:30 a.m. And those of you in my private group, I will see you guys bright and early as always tomorrow, and back to our normal schedule, Sunday through or Monday through Friday. All right. So again, if you guys have any questions, let me know. Don't forget to like the video, subscribe to the channel if you guys got value. And yeah, I'm open to all questions. If you're not following me on Instagram, that's one of the best ways aside from Discord. I have a bunch of scumbag pieces of shit trying to copy what I'm doing or impersonate me. Clearly there's something correct that we're doing. Otherwise, there's no reason to impersonate, but they feel the need to, be scumbags and try to follow or copy what I do. So then they can scam my people. Right. So don't be stupid and fall for anything. I don't manage money for anybody except myself. And some of my friends that ask, but publicly, I don't manage anyone's money. I'm not going to ask you for crypto. I'm not going to ask you for a payment unless we've specifically talked. And we don't even got to talk about that, right? There's resources to go ahead and go do that. If you do decide to partner with us, I won't. If it sounds too good to be true, it probably is. Okay. I don't sugarcoat crap in this industry. It's really difficult. You got to take time to learn. And just don't get scammed. Pay attention to the profile pictures, especially on Discord. I have animated stuff. If it looks like a still image, it's not me. If they reached out to you randomly saying anything about asking you for money or saying they'll manage your money or crypto or any of this crap, it's not me. Okay. Please don't be dumb and get scammed. If you feel like someone's reaching out to you and you're not sure, hit me up on Instagram at WMG Trading. There's no special characters on any of my social medias. I don't have periods. I don't have dashes. I don't have dollar signs. I have nothing. Okay. It's WMG Trading, period. Okay. No special characters at all. So just keep that in mind. Make it as easy as possible. And yeah, so make sure you follow me on Instagram. Don't forget to like the video, subscribe to the channel. Let me know if you guys need anything. I'm always here to help. And again, thank you guys for choosing WMG Trading as your resource to spend time with and learn from. And I hope you guys got value. Hope you feel that your time wasn't wasted. If you guys have any feedback, of course, you could let me know. I'm always keeping my ear to what you guys have to say. Because, we all have places that we can improve, whether it's in trading or in terms of what I'm doing, in terms of being a mentor, how to serve you guys the best, and the best feedback will come from what you guys tell me. I already know from what I understand over the last couple of years, what helps students the most. But if there's anything that you feel can help you more, because, we're all unique. Again, I'm always open to hearing that. And who knows, maybe it'll continue to help me be a better mentor and it'll help me serve you better, right? As you pursue this goal of becoming a profitable trader. Okay. So again, God bless you guys. Thank you for all your love and support recently. Appreciate the time. We'll be back live again here on Sunday, 6:30 a.m. Pacific Standard Time. And I will see those of you in my private group bright and early tomorrow morning. Probably at 5 a.m. again. Maybe 6. We'll see how many people are up. But yeah. So yeah, with that being said, God bless. And I'll catch you guys on the next one. Have a good rest of your day, you guys.